Seabridge Gold is a Toronto-based development stage company. I'm joined by the company chairman as well as CEO Rudi P. Rudi, great to have you here today.
Remy, thanks for the invite.
Well, first and foremost, I want to start out with an overview of your company. You've been attending the Sprott Natural Resources Symposium for several years. So you've been speaking with a lot of potential investors as well as people who are well aware of what your company does. But for people in the viewing audience who are not so familiar, can you start out by telling us about your company?
Love to. Yeah, we formed Seabridge in 1999 with a contrarian view on gold. Back then, gold was trading at about $260 an ounce. And what we wanted to create back then, which is still the same today, was what we thought would be the best leverage play to a rising gold price. It's always amazed me that in the gold space, I call gold exploration companies serial diluters, where they issue share after share after share. They don't create any value for that dilution. One of our measures of our success has been our ability to offset equity dilution with accretion to ounces. And if you look at our portfolio of projects today with all of our gold and copper resources relative to our shares outstanding, it's all about leverage. We provide more gold ownership per share than any other company in the space.
Well, Rudi, your company does have a large reserve and resource bases in gold, copper, as well as silver. So I do want to hone in on the projects that your company is involved in right now. Now, first of all, let's start out by talking about Seabridge. Can you tell me about this opportunity as well as the timeline?
Yeah, so our big project is KSM, located in northern British Columbia. We acquired this project in June of 2000 from Placer Dome for $200,000. Fast forward to today, we've now spent about $250 million at KSM, defining today what is the largest undeveloped gold-copper project in the world as measured by gold reserves. We've completed pre-feasibility studies and other engineering studies on it. We've gone through the environmental assessment process. This project is shovel-ready now, having the first 2.5 years of construction permits in hand. And we also have the support of all the indigenous populations in and around the project area.
And thanks for mentioning the KSM mine. I do want to ask about your drill targets in Nevada for the Snowstorm project. Can you tell us about that?
Yeah, so another project we just recently acquired was the Snowstorm project in Nevada. We bought this from John Paulson, the hedge fund guru in New York City. We bought this project because we believe it has unbelievable exploration potential. Snowstorm sits on the intersection of the three most prolific gold belts in Nevada: the Getchell Trend, the Carlin Trend, and the Nevada Rift Trend. It's a project that's been held privately for the past 20 years. We're in Elephant Country. We're just north of the Twin Creeks and the Turquoise Ridge project, as well as the Midas mine. And we think that the opportunities there are fantastic.
Well, Rudi, you have decades of experience in the gold business, and you shed a little bit of light on where you stand in terms of the outlook for the precious metal. You've also been quoted as saying that reserves now being mined are much faster than they are being replaced, and that peak gold is the new reality. Now, given that you've seen many cycles in the market, in particular the precious metals market, what do you expect to see in the near future?
Well, I think in terms of the industry, the big challenge for the big companies right now are finding new projects. For most of my career, the major mining companies did a good job in terms of replacing reserves with exploration activities. In the 1990s, the major mining companies in the gold space were finding 1.4 ounces of gold for every ounce that they mined. In the early 2000s, the first decade of this century, it was down to 0.7. The last 6 years, it's down to 0.3. And as a result of that, with less reserves and less discoveries, they're forced to go out and either try and buy new assets or see their production profile drop. We've been designed as a company that when the market is right for a transaction, especially at KSM where we have such a large reserve and resource package, that we expect to get a very meaningful transaction to our shareholders, and the market is moving in our favor. In terms of pricing, I am a gold bull at this point in time. To me, gold is not a commodity. It's the only form of money that's lasted the test of time, thousands and thousands of years. Gold competes against stocks and bonds. I think, my view is that the liquidity that's been created by central bank policy through quantitative easing over the past several years has resulted in in ridiculous prices in the stock market and the bond market. And as we're now starting to see an unwinding of that, I think that's really good for gold. And I think you're going to start to see people moving out of those traditional sources of equities and bonds and trying to find some safety, and gold will be a good place to be.
Well, Rudi, it's been interesting, everything we've been seeing in the marketplace this year. When we talk about equity prices, we've started to get that volatility that we didn't see last year. But we've also been seeing some interesting price action in gold as well as other commodities. So thank you so much for joining me today, and thank you for all your insight.
My pleasure, Emmy. Thank you.